Webinar. So first, thank you so much for taking the time to dial in this evening. I am Roseanna Ivory. I'll be moderating the panel. So just a quick introduction about me. I'm an investment manager at Aberdeen Standard Investments, focusing on European equities listed in a team which manages about 10 billion euros. I joined the internship program at Aberdeen about 6 years ago, and so my entire career has been there, working my way up through the ranks. But I think that's enough about me. I'm joined by three fantastic panel members, so I'm going to dive straight into asking some questions to learn a bit more about them. It's my first time meeting them as well this evening. I hope that we can have a really open and honest discussion, so please do be active on the chat function, and I will hope to answer and direct those questions as best as possible. So please do get in touch. That would be brilliant. So maybe I'll turn it over to Marianne, who could maybe just give us a brief introduction about herself. That would be excellent.
So hello, everyone. I am actually a portfolio manager and co-founder of our asset management and advisory company called Lumen Advisors. I am actually based in San Francisco, so it's a little different time zone, probably from most of you. And it's very sunny out here. My career has spanned quite a few different types of investment firms. I did start out working for a mutual fund company with a British firm called GT Global, later called LGT. And also I started in what we called emerging markets debt. So it's a very interesting field. It's fixed income, but it's focusing on emerging market countries. And then I've been doing that for various type of firms, institutional kind of accounts, until we started our own firm in 2002, Lumen Advisors. So it is a hedge fund company, so we can do long and short across multiple asset classes, bonds, equities, currencies. So my job right now is, rather than directly running a portfolio, I'm doing a lot more advisory with our institutional clients. So this can be family offices, this can be pension funds, to how to allocate assets around the world. And then most recently, we are onto something even more fascinating, which is to build out a digital investment system, utilizing our investment process that we have gained over the 25 years that we have been managing money. So we're doing some kind of invest tech or fintech. So I'll stop there.
That's brilliant, Marianne. Lots for us to pick up on later on in the panel. Maybe I'll just pass it over to Nick.
Good evening, everyone, and good morning to Marianne. My name is Nick Hartley. I'm a portfolio manager at GIC. GIC is the sovereign wealth fund of Singapore. So we're very lucky as far as we only have one client, which is the government of Singapore. Before joining GIC, I actually worked for Legal & General and was ran the active equity business there and was a portfolio manager there. But I actually have a sort of, I'll go in sort of reverse order in terms of my CV and rattle through it pretty quickly, because obviously I'm quite old, so it's quite long. I left university and joined British Airways. So I joined them on a general management program. I spent most of my 20s at British Airways doing all sorts of different random jobs. Then decided that I needed to earn enough money to be able to at least buy some form of property in London. So I left and went to Bain & Company, which is a management consultancy. So at Bain, I spent a lot of time just advising companies, so doing like corporate strategy, and then also working for private equity firms that were looking at buying businesses. So that was where I sort of started at least advising on investing. And I did a big project for a company called BTPS, which was the BT pension scheme, which also owned an asset manager called Hermes. So I spent about a year working for them when I was at Bain, and that basically opened my eyes to investing as a job rather than as something that I would do for fun, which was what I was doing kind of in my personal time. And so at that point, I made a decision. I wanted to get into investing, and I wanted to get into a buy-side role, so a role where you're making the investment decisions yourself. But I was sort of in my mid-30s and had zero experience, so I was the least employable person. And so in order to get into investing, I then went to an investment bank. So I joined Goldman Sachs, and I went into what's called the sell side. So the sell side is the people that sell the things that we are buying. So in my case, it was the people that would sell you equities. So if you wanted to buy a stock, you have to buy it from a bank, and Goldman would sell them. And in order to help them sell, they have a bunch of analysts that advise you on what you should be buying, and I was one of those. So I ran a product called GS Sustain, which was lots of, it was basically kind of what are the best companies you could buy globally that are exposed to lots of positive structural themes. But there was also an ESG component to it, which back then was sort of very controversial and much spat upon by lots of people, but is now very popular. So anyway, after serving a fairly painful 4 years at Goldman Sachs, I left and joined L&G, and that's when I finally got into the buy-side role. And here I am now working for GIC.
Thanks, Nick. Wow, that's quite the journey. So a few questions already spinning in my head on that one, and but we'll start again with Abigail to introduce herself. That would be excellent.
Hi, everyone. Nice to be with you. And my journey's probably not quite as interesting. I'm a senior portfolio manager at the Andrew Mellon Foundation, which is a philanthropic foundation based in New York that really makes grants to support research in the humanities and arts organizations. I spend all my time helping to manage the foundation's endowment, which is approximately $7 billion. And I spend my time really thinking about our private equity portfolio. I spend almost all my time selecting venture capital, growth equity, and buyout funds that the foundation should invest in. I've been at the foundation for about 10 years. Before that, I worked at Lehman Brothers for 5 or 6 years, both before the bankruptcy and after the bankruptcy in New York, London, and then back in New York. And before I worked at Lehman Brothers, I was completing my MBA in New York. And before that, I worked at an investment consulting firm in Boston called Cambridge Associates, where I really learned that roles like mine today actually existed. So I'll pause there and look forward to the conversation.
Marianne, maybe just interested to hear about whether this was what you always wanted to do. What other opportunities did you consider? I suppose the range of options were not necessarily as wide now as they are now. So yeah, just interested to hear why you picked that part of the industry.
So I do have a story to tell. So I'm originally from Hong Kong. So when I started my career after I did my undergraduate in the UK at Cambridge, then I came back to Hong Kong to work in a bank. But as I was going through the banking, which is like a merchant banking, so basically we were arranging loans for borrowers in Asia. So after doing that for a few years, I thought this is not as intellectually stimulating as I wanted to be. And given my background was studying economics, naturally I thought, well, apart from bank, what other career that I can pursue? So I already, for some reason, decided that investment management is what I wanted to get into. It's hard to really understand why I decided on that. Perhaps it's related to my international background. I would love to do international investing and also my economics background. But anyhow, I had a choice between staying in Hong Kong to go into a buy-side firm or coming out to the US to get my MBA. So it was a very different decision. I ended up coming to UC Berkeley to get my MBA. And then after that, I got into the field of investment management, really due to serendipity. One of my senior in the MBA school basically handed my resume to the board of trustee of a mutual fund company. I mentioned GT Global, which is a British firm. They have a large office in San Francisco doing mutual funds very successfully. And because of my Oxbridge background, I got interviews with both the fixed income, which is the bond side, and the equity side. And very luckily and very gratefully, the fixed income head decided to have me. And there I am. I continue to stay in Bay Area, San Francisco since then. Never left.
Sounds pretty glamorous right now as someone who's stuck in a small shoebox, the Bay Area. Maybe just moving on to Abigail, be interesting to hear your thoughts on why private markets, when you heard about your job, maybe working for an endowment fund, how is that different to other opportunities, and what really was it that attracted you to those areas?
Yeah, so I'll take a step back. I was a history major. I'll sort of also answer the previous question a little bit. When I was an undergraduate, I was a history major and a French minor, and didn't really know much about the world of investing. I had done a couple of internships basically to make some money in the summer, not proper intern programs, but like working for the stockbroker of my parents' friends, who was going to pay me to help them out, basically making coffee. So I learned a little bit about investing on the side, but when I was graduating from university, I did decide that I wanted to try to learn more about investing. So I worked at Cambridge Associates for a couple of years. And for me, that was a great opportunity to learn more broadly about the world of investing. So I did learn a little bit about public equities. I learned about fixed income. I got exposure to how hedge funds work. And I also started to learn about private equity. And what I liked about private equity was when you started to analyze the private equity funds, you had a chance to really dig in to the companies. And the companies really didn't change that often, because the model, at least most of the private equity firms that I invest with today, the model is really that private equity firms will buy businesses and hold them for approximately 5 years. And so the chance to really understand the companies and to talk to funds about how they change over time was and what they're doing, frankly, to really change those businesses, was something that I found very interesting. And so that's kind of what originally piqued my interest. I then went to business school, worked at Lehman Brothers, but I did always find that the private markets for me were really interesting, because I did like understanding the businesses that the private funds were owning.
And in general, private investing is a bit sort of longer duration. The time frames are maybe a bit different, and maybe just a little bit about, again, the endowment foundation side of things versus maybe what other people might do.
Sure. Well, yes. So for sure, Roseanna mentioned, private equity firms will they'll buy companies. Sometimes they'll buy the entire company. Sometimes they'll own just a small portion of the company, but they will buy the businesses and try to affect change over the course of time. And there's not a lot of turnover until they decide to sell that business, and then that business is gone from their portfolio. So it does take a lot. There is a much longer term. There's longer hold periods, and there's a kind of longer term mentality. I would say that with respect to a foundation like the Mellon Foundation or another endowment, our view of the world can be quite long term. So just to be more specific, the Mellon Foundation was formed in 1969 by Andrew Mellon's two children. And in 1969, we were capitalized, in 1970, we were capitalized with $700 million. And then the foundation has really grown since then. So the idea is that the Mellon Foundation, but many other endowments, they're meant to be around in perpetuity. So when we think about our investment horizon, it's quite long term. So we can really allocate a lot of our dollars, a lot of our investments. We can allocate to private funds and to very illiquid structures, because we think that we're going to be around for a very long time. So if having a long horizon allows us, we think, to generate a strong return, it's a really nice addition to our portfolio, because we have a pretty predictable sense of the cash flow needs of the foundation. It's really just to operate the foundation. So we can, when we think about our investing horizon, it's quite long, and we can take some bets that I think perhaps other types of institutions like insurance companies and others can't do in the same way.
That's great, thank you. I also studied history and came out not having a clue about what I wanted to do. So yeah, it definitely took me some time to find that out. Luckily, I now enjoy my job, so the time was worthwhile. But yeah, it's a journey. And speaking of journeys, Nick, I suppose, so we have a question on the chat, which is basically, if you can't get into investment management the first time around, what other career paths might you recommend? Now I'm asking you because I feel like you've done a few of the career paths, so maybe which has the most transferable skills, or an area that you might suggest someone starting out might go into?
I definitely wouldn't recommend my own career path, that's for sure. So just to complement it, by the way, I also studied history. So when I was at university, I had literally no idea about finance, didn't understand it. It was just, it was complete dark black box to me. And I just walked off in the opposite direction. So it took me a while to meander my way back into investing. So, but I actually think this is kind of interesting. So, so how is it that you have 3 people out of 4 on this call that have studied history? Well, I think that points to the breadth of thinking that is valuable in investing, and therefore it doesn't really matter what you studied, as long as you're interested. And it is obviously important that you've got like a basic sort of quantitative understanding, because it is quite a quantitative job, but it's not that much of a quantitative job. I mean, you know, I didn't even do maths at A level, right? So, and I think it's there is a perception, or a sort of finance is presented as being a kind of very numbers, quantitative work that is excluded for lots of vocations, but investing is much broader than that. And I think really good investors in particular have a kind of breadth of thinking aligned with a reasonably methodical process, which complements it pretty well. So to come to your actual question, and apologies for evading it, given that, I actually think there are lots of different routes into investing, and as you've heard just from the people on this call, there's lots of different types of careers within investing as well. So it doesn't particularly matter. In terms of transferable skills, I personally found the time that I spent at Bain incredibly useful. Just in terms of what I learned is sort of a framework for how to think about businesses and how to think about industries was extremely useful and very transferable. And it was like, for me at least, it was a really useful sort of structure or way of framework that I could apply sort of in retrospect to the kind of the amount of time I'd spent working in a business in British Airways, where I'd seen lots of different bits of the business. But then it sort of it kind of filled out the edge of the jigsaw, if that makes sense, in terms of it gave me a much clearer idea of thinking about businesses and the competitive dynamics of businesses, and what a good business is and what a bad business is. So I would recommend consulting as a good route into anything, frankly. So that would be probably my suggestion.
Can I add?
Yeah, sure.
The question wasn't for me, but I thought I might. I would say one of the formative experiences for me was working at Lehman Brothers. In that, and the reason I mention it, kind of following Nick, is just I think that working at a large firm that has very high standards, that does a lot of training of its junior people, can be a really beneficial way to start out. It also allows you to develop a network and understand the importance of developing a network. And I think, just speaking personally about moving from Lehman Brothers to a foundation that has 100 people and frankly 12 people on its investment team, that's the thing I missed most was the big network of people. And I think working at a big firm, whether it's Bain and Company, another consulting firm, or a large investment bank, not necessarily doing it forever, but starting off there really is terrific for building out a network more broadly in the field of finance.
And just quickly to add to that, there is also just a kind of practical benefit of, if you're hiring into an investment role, it's just so much easier to hire someone that is coming from an investment banking or consulting. If they've done a few years, you kind of know they've had the sheet drill of how to construct an Excel model and how to proofread their documents and how to make sure that things are sourced properly and how to think and structure the analysis. So it's definitely a sort of probably I'd say the most common entry point into investing is via the investment banks, as Abigail was saying. That's certainly route one in my experience.
Yeah, I would agree. Yeah, go ahead, Mary.
Is that okay? Yeah. So I like to add a couple more thoughts. There are some questions coming in about whether getting an MBA is helpful to become a portfolio manager. Given myself, I actually did use that route into the buy-side investment management, but I would say it is not necessary to get an MBA, and perhaps getting a chartered financial analyst is probably more relevant. And obviously it has great credibility, and it is now so popular around the world. I think even I think in Asia they have the most probably exams from for the CFAs. The other thing is, I would say, to digress a little bit on all the analytical skills coming from investment bank or other type of consulting industries, all very important. But one of the things I learned is that some of the most important skills as an analyst or portfolio manager is actually communication skills, because having a lot of great ideas, but you cannot synthesize your information or communicate very succinctly to your portfolio manager or your management can be a problem. So I would urge you to think about some of the other things that in your skill set that either you have done in your university, being a very communicative person, how you write, and all of these things are also very important to start out as an investment analyst.
Yes, I think that's I definitely agree with that. And just in terms of routes in, I think so. I work for a fairly large investment firm, and I think that's also a useful way to go. And you don't necessarily have to start in an investment role as well. So you could come in and learn more. And I think it's as much about, I had no idea what I wanted to do. And I think the time that I spent on the internship scheme and the grad scheme, I spent time in risk and marketing and hedge funds, etc. And that made me understand what a number of the different areas within finance were. I mean, I would never have applied to do credit. I mean, I didn't end up doing that, but I wouldn't at the beginning, just because I had no idea what the job was or what it might entail. And so I think there's quite a lot to be said by doing lots of different internships and learning by doing, because I think also personality types and the types of things that you enjoy also plays an interesting part, because for example in public markets it's a very strange job in the sense that every day whether you're doing well or badly. So if you aren't someone who likes not being right all of the time, etc., then maybe public markets isn't so interesting on the equity side, and maybe there are other longer term investment type things, or there are more ESG related roles etc. So I think sometimes you also have to think about the things that you enjoy. Do you enjoy putting forward your opinion and you know, having some fairly robust discussions about whether you're right or wrong, etc.? Or there are just so many different roles within investing, and you can be either direct or indirect, or there are lots of really interesting roles as well around within risk or compliance or audit or a whole range of different things as well. So yeah, I would definitely encourage that as well. So I think that's useful. And maybe just in terms of sort of the best thing that you like about your job, Abigail, I'm interested there, or maybe sort of what's the best bit, what's the worst bit? That would be really interesting.
Sure. What I love about my job is the breadth. I don't know if it sounds broad to everybody, but I have to stay up to speed with what's happening in the world of venture capital, with what some of our, I guess, you know, a lot of the innovations that our venture capital managers talk to us about. At the same time, you know, staying very close to what's going on in the IPO market and trends in mergers and acquisitions is also important, because that affects the buyout manager's ability to exit some of their portfolio companies. So I think I love having to keep up with all of that, and yet also being able to track what goes on in the portfolios in detail. I think that's, for me anyway, a lot of fun. I think what's challenging is that I work for, I alluded to this before, we have quite a small investment team managing a big portfolio. And so I think that's challenging because, you know, sometimes I have to wear lots of hats and there's not a lot of leverage. So it's generally myself. I think it's, the negative all probably cuts both ways also, but it's often myself and one junior person on our team doing all of the due diligence when we're looking at adding a fund to our portfolio. So on the one hand, it's very hands-on and interesting, but it's a lot of work because there are not a lot of people to help out.
And Nick, just in terms of when you're interviewing people, there are a few questions here about sort of what you look for, maybe in terms of raw talent or a mixture of skills. Because if someone doesn't have an economics or maths background, you know, what kinds of ways might you think about judging their investing aptitude?
Sure. So first and foremost, I look for genuine interest. And you know, that sounds really basic, but I think the people that last in investing, particularly if you're direct investing or public market investing, I think the people that genuinely love investing to the point where they're sort of almost boringly geeky about it. And so looking for that kind of passion is quite useful, and you can kind of see that come through. And look, let me be candid, I had no idea when I left university what even investing was. I didn't invest, so it certainly didn't happen to me overnight. That would be one thing. Then secondly, in terms of sort of, I guess, more tangible skills, is basically the ability to deconstruct a problem and think logically about something, but also align that with breadth. I mean, one of the things that Abigail was saying she loves about the job is the breadth, and I think that's so true and actually so important, that that to be a good investor, you need to be able to kind of analyze in fine detail, but think quite broadly. And those two things don't always go together. So you want someone who's got kind of an intellectual curiosity that is thinking big picture about how things may evolve, aligned with enough of a sort of analytical rigor to be able to structure that so that you don't just get lost in some sort of vague hypothesis.
Yeah, that's that's really useful. And I think from having done a little bit of interviewing myself for sort of internship type programs, I think companies are actually getting a lot better about not asking knowledge-based questions. There's quite a lot of thought that's going into that. So, you know, if you do go along to an interview, no one's going to ask you why you think Tesla's share price is where it is, or I personally don't think they should, because I don't think that's, you know, it should be more sort of aptitude type based things. So I think therefore that helps level the playing field for people who don't have that background and are feeling a little intimidated. And pivoting from feeling intimidated, maybe Marianne, I'd be interested to hear your thoughts on why you think younger women are maybe put off. You know, the metrics in terms of applications for buy side is really bad. Even investment banking is a lot better. So, you know, why do you think that is, and what would you say to young women who are potentially put off?
And in fact, I have written an article in the Medium called Uplift Women and Commit to Diversity. So in that article, in the Medium post, I did address some of the issues, because I read a research that by a UC Berkeley professor, Laura Cray, that in general, women would perceive business and finance as more unethical than going into law or medicine. So I think there is probably that perception that it involved more maybe decisions that would compromise the ethics side in business and finance than the other professional route. And then the other issues, I think, maybe it's not as much as put off, but they don't really have enough role models for them to understand the different nature of investment management. In fact, everybody has commented, it's such a big field. I mean, you have the public side, you have the bond equity, you have private side, now you have even fintech as part of the sort of the investment possibility in terms of career. And so I think it's more general. You need more education and more role models. And in that, I also belong to a nonprofit called 100 Women in Finance, that we built up quite a huge network, 20,000 people around the world, and help to promote women investor, women analysts, and also do a lot of education events like this with panels and different topics. So I hope with education and probably more role models, and as well as really the commitment for diversity, hopefully that would move the ball forward.
I would add one other thing to that, Roseanna, which is we see our role as an institutional investor, not among the largest, but a large institutional investor. We see our role actually to talk to our investing partners about the diversity of their teams. And so, you know, I think many of us on our investment team, we care about having a more diverse industry. And we also think it's part of our organizational mission as well. At the Mellon Foundation, we care broadly about diversity. So we then take that upon ourselves to engage with all of the private equity firms and all of the public equity firms and the hedge funds that we invest with, to ask them what they're doing to try to recruit more diverse candidates, as well as retain both women and candidates from underrepresented minority backgrounds. But it takes time. I don't think the change is going to come quickly, but I think we hope that maybe it helps a little bit by having lots of constituents ask and push on this topic.
Yeah, and I think that, you know, diversity, obviously we're talking about gender just because of the name of the charity, but there's also a greater diversity component within that, and I think all firms should work towards all forms of diversity. But Nick, just interested to hear your thoughts at all. I mean, do you have any thoughts about why the gender imbalance continues to persist?
Yeah, I mean, it's actually astonishing to me, because there is literally no reason, particularly in investing, why this should be. I kind of get it a bit more for sort of brutal hours jobs, like sort of investment banking or law, where you are basically, until relatively recently, and probably even now, you were kind of expected to be, at the sort of beck and call, and that's very, very hard to manage in terms of kind of family life. Investing is not like that at all. So it staggers me that the gender imbalance in investing is worse than somewhere like investment banking or law. I mean, it's ridiculous. It is absolutely indefensible. And so I don't have a good reason for why, but I really passionately believe it needs to change. And the only explanation I can have is just the terrible job that investment management firms have done explaining to people when they're starting out in their careers what a great job this is. And the reason I say that is because, like, I've done hiring all the way from sort of entry level through to kind of senior portfolio manager roles, and it's so stark, even with active discrimination where you're deliberately trying to recruit a female for the role. The kind of the candidate base is so skewed, it's very hard to do. And so we have to change it at the beginning and encourage more and more women to join investing, because it's such a fantastic job. And trust me, I've done a few jobs, so I can say that with some degree of authority.
I think it's a really interesting point, because I know from speaking to my firm about this that it's simply from the very beginning a lack of applications. Later on up, it's impossible to do something at portfolio manager or senior portfolio manager if there aren't the candidates at younger levels. And so I guess would really reach out to everyone on this webinar to give it a go, to apply and to ask any questions of any of us, if you are nervous or maybe it's just not interesting. That's also a fair enough point. But maybe also interesting, Marianne, to hear your thoughts on what advice you might give your younger self, knowing everything you now know about investing.
Yeah, so it comes back to the question, what is the best bit and the worst bit about investing? So one of the challenges is obviously you're working in a very uncertain industry or markets. There's always something that is happening, and no crises are the same. So obviously when you go through certain market crises, or what we call drawdown, when you from the peak to the trough, it could be 30%, 40%, like in the financial crisis in 2008. It was a huge drawdown. So you probably got to, you can obviously get very entrenched or affected by what is happening in the market. So the ability to remove yourself from the markets and able to take yourself out and really try to, I wouldn't just use the word relax, but really take good care of yourself when you're younger, when you're doing investment. So for example, I'll give you an example. When we were running our hedge fund, I remember, we were investing in Russia, in Turkey, and I'm based in San Francisco. So those are the time during midnight, I have to start trading some of these positions. And then by 6 a.m., I have to get up because the 6:30 my time, New York opens. So you hardly get enough sleep, especially during the 2008, 2009 crisis. So all of these are just a reminder for myself that had I want to do it again, I would take really good care while I'm committing to my job. Because when you're young, you tend to sort of overwork, and then problems can occur later. So this is probably something I would do. I would do more yoga probably. I would probably go to more concerts, and really not work-life balance, but integrate your life into your work even better.
I like the yoga and concert advice, particularly during these lockdown days. Yes, indeed. And Abigail, anything that you think you wish you'd known or you would tell your younger self about in terms of your career or anything really?
Yeah, I mean, this one's personal and it's pretty straightforward, perhaps not quite as thoughtful as Marianne's advice, but I would tell my younger self to have more confidence. I do think that coming out of my undergraduate experience, having focused on history and French and then going to work at an investment consulting firm, I really thought that I knew very little. And I didn't know much about investing, but I did know a lot about human behavior and I understood people dynamics. And I don't think I valued that enough. And I think somebody asked a question about softer skills versus technical skills. Like I didn't have any technical skills, but I had plenty of soft skills. And I think trusting your instincts and having confidence that you still can ask good questions and have good judgment, even as quite a junior person, is something I would tell myself. But that's specific to me, so I don't know how broadly applicable it is.
Maybe I'd just add one, which is probably more relevant the sort of later on in your career, but I think is important from an investing perspective, which is to kind of give yourself the time, figure out what kind of investor you want to be. So I think it takes a while to kind of figure out your own approach and what works for you. But keep working on that. And then once you feel comfortable with that, stick with that and arrange things around that. And I'll give you a specific example. So why am I working for GIC, the government of Singapore? Because it's an incredibly long-term investor, and that completely suits how I like to invest. So I'm not going to be up trading Russian equities in the middle of the night. It's not my bag. I wouldn't be any good at it. What I would far rather do is be thinking kind of on a longer term time frame and not have the stress of multiple clients. Am I winning their business? Are they going to foreclose on me because I've had a really bad quarter? So thinking about kind of how you like to invest, what you think is your approach, and then kind of ensuring you're in the right place for that kind of thing is over the medium term, I think, quite important for kind of a contented and successful investing career.
Yeah, and I think Marianne's just put on the chat, I think there's some really great resources. So I would really recommend just going and reading lots of different stuff, listening to loads of different podcasts, because you get through lots of different people quite quickly. That's why I love podcasts. Whenever I'm running, I'm listening to podcasts, and it's as much interesting because there's often sort of one or two kernels of advice, and you also learn about so many different jobs that are out there and how people think about investment in a completely different way. And so I think that's really good. Advice to my younger self, I'd be like Abigail in terms of, I think, tell myself that I wasn't an idiot all the time and to feel a bit less intimidated. I think that was more about me. I don't think anyone ever tried to intimidate me in the workplace, but I allowed myself to feel intimidated by sort of jargon and a lot of things out there, because it takes ages to work out really what makes a good company and how you invest in them, and you can't really fast track that, and I think you have to just enjoy and lean into the learning process.
Sorry, I have one more suggestion, which is start investing. So I put this off until probably too late, which is partly why I didn't realize I enjoyed it so much. And then lots of people that I interview, like, oh, so what do you invest? And they're like, oh, I don't invest in anything yet. Oh, why not? So, well, I don't have enough money. It's like, well, you've got some money. Just choose to invest it, even if it's a small amount, as long as it's enough that it's going to hurt when you lose it. It matters. You'll learn so much from it because, painful but true, there's nothing like losing money to learn. So start investing early.
Yeah, I think that's really true. There's a great poker player investor called Annie Duke, and she always says, as soon as you say won a bet, some outcome of anything, it suddenly sharpens your mind, and it's as much asking the question as actually putting the money down. And I always quite like that as a sort of shorthand way to remind myself, as would you put your own money behind it? Because that's the ultimate question. Why would you put a client's money behind it if you're not going to put your own? And that obviously doesn't mean you have to own everything that you do cover or anything, but I think that in itself is really interesting. Abigail, I think you have something.
Yeah, I totally agree with that advice. And I would say, somebody in the chat was, I think, asking what you can do if, in order to try to secure an internship. I think that's the best story you could tell for why you're interested in an internship or a graduate program, is to talk about the, couple £100 that you were able to invest in a stock or two, and why. I think that's the best way to demonstrate your interest in the field.
One more thing, if I could add, I definitely remember Peter Lynch's advice that when you start to think about investing, you can find something you really know very well about, that you can explain to a 5th grader or equivalent UK a year 6 student, but not long enough to get them bored. So you can start thinking about what you like in terms of maybe some of the brands that you have been buying, and you can think about their stock as an investing, and then start building up this model portfolio that I think Nick and Abigail were saying that maybe during interviews it will be very helpful to understand your investment thinking behind these stocks or companies.
Yeah, Abigail, it was interesting maybe just to follow up on a point you were making about sort of engaging as an investor, and maybe also be interesting for some people on the call to learn a bit more about that side as an active investor, what you can do and exacting change. Because I suppose at the moment with all of the sort of Robin Hood stuff, I think investing, maybe large institutions get a bit of a bad name. So just interested to hear your thoughts there.
Yeah, there's so many, there's a lot of ways I guess I could answer that question. Where I work today is a place that it's a mission-driven organization, and there are a lot of values I think that we consider to be very important. And when we introduce ourselves to prospective firms that we may want to invest with, we try to talk a lot about our values, and sometimes, in some ways that certainly comes through when we ask questions about team diversity, and I think it comes across in other ways, but we try to remind people about our mission, and we try to connect our investing partners to our mission to some extent. And I'll give one example maybe if that's helpful. A lot of the people that we invest with have made a lot of money, and they do a lot of charitable work on the side, especially as they get older and make even more money. So we got a large distribution of capital from a firm that we invest with back in March, the very end of March. And I wrote a note to the private equity firm that we invested in, and I said, thank you. And I attached the press release announcing some emergency grants that we had made to support some organizations in New York City that were having a terrible time in the first couple of weeks of COVID. And anyway, the investing partner wrote back and he said, I happened to sit on the board of this organization. I didn't realize, it hadn't happened. It was all happening real time. I didn't realize you'd made this grant. It's so exciting. It just makes it all feel worthwhile. I don't think that everybody feels that it makes it worthwhile for them to make the connection between investing and philanthropy. But for some people, it really does matter. And wherever possible, we try to spell out that connection for people, because I think for most of us anyway, on our small team, it really does matter. And we hope that we're finding investing partners who do care about our mission as well. I don't know if that totally answers your question, Roseanna.
Yeah, it does. I mean, I guess it was less, I wasn't trying to start a debate about Robin Hood, but maybe Nick, interested to hear your thoughts as well, because I suppose just in terms of being able to exact change, there are lots of societal issues that people feel very strongly about, and maybe interesting just to hear your thoughts on what investing can do and what an impact it can make?
Yeah, so there's I guess a few aspects to this. The first is I actually would echo what Abigail was saying. I think from my experience, most people that I've met in investing genuinely care about the role that they are performing. And, you know, in my instance, what we're doing is effectively funding the citizens of Singapore. You know, our profits, if you like, fund a decent proportion of their budget. It really matters. And then what I was doing before with Legal in General was I was responsible for investing other people's pensions. That's so important. So there's a real social value to the role that we do that I think is often underappreciated until people are actually working and investing. Then the flip side of that, as a public equity investor, you are a part owner in a company, and therefore you have a serious responsibility to ensure that that company is acting in the right way. And especially if you're a long-term investor, like a lot of what you're doing in terms of meeting with companies is obviously you're working out whether you're going to invest in them, but once you're invested in them, you have a role to influence what they do, and that can be quite significant. You know, just if we just take this point of diversity, the role that investors have played in driving much greater awareness around diversity and changing practices within business to facilitate diversity has been very significant. And that's like one small aspect. If you then take climate change as another, there's a very significant influence that we as investors have because we own the companies. And so, you know, that you can use that to good effect if you're willing to.
Actually, Nick, I had a follow-up question from something earlier, which was you were talking about hours. And so just to give a sense of that, because so from my experience, similarly, I have not had to get up in the middle of the night. So I do European equities. So getting up an hour earlier is about as much as I have to do. And so I suppose the point I was trying to make is also that for me, one of the attractions of working in investment management was that it was very intense, but that markets shut. So for me, to some extent, there is a close towards the end of the day. You work a little bit after that in public markets, and therefore it was very intense, cerebral job, but I didn't have to work weekends really unless something happened. And so therefore for me, there was a balance that I felt wasn't there in investment banking or law. And you know, therefore I personally feel that it does give quite good balance with family life or home life, etc. So maybe just interested, Nick, to hear your thoughts on that, seeing as you also weren't a midnight trader.
Well, yeah, but I was working in an investment bank, and I also worked as a consultancy. So as a consultancy, ultimately you're charging your clients quite a lot of money, and the expectations are that you're going to be at their beck and call whenever, and depending on the client, that can be always, especially if the client is a private equity firm looking at doing a deal. So that is sort of kind of non-negotiable and pretty brutal at times, not always, but at times. At the investment bank, it's a little bit more, at least in my experience, there was an element of face time, which was quite unnecessary, but just part of it. And so you had, I guess, a bit more control, but actually culturally, you probably had less control. Whereas in investing, I actually think the challenge is switching off. So I do global investing, so the markets are never shut. I would just echo kind of what Marianne was saying in terms of advice. It's like you've got to find a way to make this a balanced and sustainable thing, because if you're buffeted by the markets 24/7, you're just going to die. It's not going to be fun. You're going to do something else. So you have to kind of find a way to compartmentalize your life so that you're not constantly sucked in, and that is the challenge. As you said yourself, Roseanna, you know, the markets are moving. There's always news. There's always price moves. There's always something going on. That's the great thing about the job. There's always something happening, but you also have to kind of regulate that so that you're not always sucked into the thing that's happening, and you have a degree of balance.
Yeah, and maybe just before we hand back to Vicky, Marianne, maybe I'll just ask you about that engagement point that we were just talking about, and you know, the impact, positive, hopefully, that investing can have on society and on the future.
Yeah, I think on that point, just, read some very interesting statistics that women, by 2025, 2030 will own 60-70% of the household wealth. So that is a trend. I think it's really, going to affect quite a lot. So as women, perhaps it is good to be more confident about investing, as there have been studies that perhaps the decision on investing were usually made by the male than the female. So anyway, I think the most important thing is to start early, think about that, and don't be intimidated by it. We have gone through all of these things. I think women are naturally good investors. Sorry about that, Nick, but I felt that the women are generally actually quite analytical and trade less, and they are more consistent perhaps in their investing behavior.
That's really interesting. And so we have had a few questions that we haven't answered on the chat, but I think that was as much a function of specific questions about firms or podcasts, and I don't want to steal Vicky's thunder, because I'm sure she's going to come on and tell you about all the great resources that GAIN have. So I will hand back to her with 1 minute to go.
Oh, done the mute thing again. Thank you very much, Roseanna. Just before I close up, I'm just going to run one last poll question, which I'd be grateful if you could answer. I hope you all had a really good session and you took away a lot from what has been a really insightful and informative chat. Thank you for being here to all the audience. I know Zoom fatigue is a real thing, so thank you. But mostly, and a huge, huge thank you to our speakers today. Like I said in the beginning, the absolute best thing about GAIN, without which we couldn't do any of what we do, is our speaker volunteer network. And I hope the four you've met today just proved to you what an incredible network that is. And thank you so much for your time, for sharing all that you have with our students, and we really do appreciate it. We've got a few more events coming up before the end of sort of the spring term. So please check us out, check out our events page on our website, which is www.gainuk.org. We're also on all the social media channels. So we're on Instagram, Facebook and LinkedIn as Girls Are Investors. And on Twitter, the odd one out, we're just at our investors. So no girls on that one. So yes, once again, thank you to our speakers. Thank you to all of you for being here, and hope to see you all soon, speakers and audience. Thank you. Bye.
Thank you.
Thanks, bye now.